Everybody, how's everything going? Hope all is well. So I just wanted to hop on here. Had another interesting question that came up that I really wanted to address. So here I am, Matt Valencia with Jersey Realty and Abdel Kwame with PRMG. So the question we got asked just recently was, what's the difference between going through a mortgage broker or a direct lender like yourself, and what are kind of the benefits of it?
Got it. So mortgage brokers and mortgage lenders, both heavily involved in the industry when it comes to financial institutions and giving money. Now, the main benefit between the two is extremely different. When you go with a mortgage broker, they're essentially like the middleman, where they do a lot of the quote-unquote shopping for the client. So if you're a client who don't necessarily want to do some shopping or anything of that nature, we're looking at different banks, then a mortgage broker may necessarily be a benefit to you, right? It's kind of like if you look at going to like a car dealership and you sit behind like the F&I, the finance guy, and then what do? They kind of look at the different banks for you, try to get you the best rate, so on and so forth. Now, the one thing though is now you do pay them for their services, right? And it's usually on a more or less commission basis for them, where depending on the loan amount, they would get compensated by a specific amount of points, whether it's 2%, 3%, that you actually pay up front, as opposed to working with a direct lender. Direct lenders are essentially financial institutions that lend their money personally, okay? So you're dealing with one institution, generally. You're dealing with the one loan officer, loan originator, maybe with his team, like how we have my stuff set up. And then we kind of take it from there. Now, compensation, you would ask how we get paid. So on our end, it's compensated. The money, the bank makes the money based off the interest in the long run, right? So you're necessarily not really feeling that heavy payment up front when you're kind of doing that on the flip side when it comes to a broker. Now, in addition, brokers sometimes tend to have the opportunity of shopping you for your rate right now. On my end, as opposed to a direct lender, it's fixed by the Federal Reserve with our margins, but interest rates right now, as everybody knows, is super, super low, that it's kind of a little bit more plateaued, everywhere else, where you're looking either into the 2s or the 3s. Back in the day, a couple years ago, 2-3 years ago, brokers were a little bit more predominant because interest rates are so high, and clients wanted to pay those points a little bit down more in order to be able to get some of those 2s and 3s that we're sitting in now.
Okay. So traditionally, and just because I kind of want more information just for myself, my own knowledge, do brokers charge points and in that case? Because they're shopping around it sounds like they're shopping around the rate, right? Which they're sizing up against other direct lenders.
Yep.
So they would essentially get paid through points up front at closing?
Correct. So normally the compensation rule for anybody in the mortgage industry has significantly changed after 2009 when they came out with the Secure and Accurate Fair Transmission Act, with the SAFE Act. That's actually what mandated everybody, loan originators, they have to go to school, they have to go through the licensing school, they have to pass the school exam, they have to pass the state exam. So that's for both lenders and brokers. So the compensation now changed. Previously, you were able to charge clients points as a direct lender, or you were able to charge clients fees, or clients weren't even aware what's called the GFE, used to be called, now it's called a loan estimate. That's fairly new, and I mean like 12, 13 years is where it's more or less been into practice, and it's allowed consumers really through what's called RESPA, the Real Estate Settlement Procedures Act, to become better shoppers, to be aware of what it is that you're paying. I had a client the other day who just sent me the first page of her LE, and it was through the realtor, and they asked me, they're like, hey, can you take a look at this? So I looked at it, and right from the get, I had like 2 simple questions to the client is, are you going with a broker? And she said, I'm not sure. So I'm like, all right, well, let's take a look at the LE. And the first page of the LE clearly showed that the client was getting charged close to like $6,000. It was two and a half and change points. And I told her, hey, I think you're honestly going with a broker. You know what I mean? She's like, let me find out. So essentially she got back and she said, yes, it was a broker. So I called it. On our end, generally, it's very restricted, right? We have a commitment fee and an origination fee of $995 and $495, and that's just regulated, right? You can't charge like $3,000-$4,000 because you can't back it up. So again, there's always benefits between the two. It really just depends as a consumer. Now remember, you as consumers also have the right to shop.
Yeah.
You know, you can rate shop and it won't necessarily affect your credit significantly. Usually you have a 30 to 45 day window under the Fair Credit Reporting Act where you're allowed to more or less shop, so you're not kind of stuck with that specific lender if you're not feeling that level of comfort or trust or honesty, whatever it is that you're